Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight in corporate filings. And today we have a real head scratcher from Vanjia Corporation. Get ready, because this filing is a masterclass in, well, you'll see, before we dive into this unusual report. If you're someone who likes to know what's really going on behind the corporate jargon, make sure you hit that subscribe button. We break down these complex documents so you don't have to. And hey, we've got a growing community over on Discord, linked in the description below, where we chat about these findings, so join us there. Alright, let's get into Vanjia Corporation's latest filing for the quarter ending the 30th of September 2025. Now, usually these reports give us a clear picture of a company's health, but with Vanjia, it feels a bit like looking for clues in a very minimalist painting. First off, they're labeling themselves a smaller reporting company. This generally means they don't have to provide as much detailed information as the big players, but what they do provide is usually what we want to focus on. They've got 30 million shares of common stock outstanding as of the 30th of September 2025. That is a concrete number, and it's important because it's what we'll use later to understand their per share metrics. Now, let's head over to the financial statements. This is where the story typically unfolds, and Vanjia's story is, shall we say, unique. We're looking at their balance sheet. On the 30th of September 2025, their total assets are listed at $71,509. That is a pretty small number for a corporation. Their cash on hand at the end of September 2025 was $66,789. This means most of their reported assets are in cash, and the total assets for the company are just $71,509. This is notable because it's very low, especially when compared to their authorized shares, which go up to nearly 10 billion. Now look at their common stock. They authorized a staggering number of shares, almost 10 billion, but only 30 million are issued and outstanding. The value attributed to this common stock is just $3,000, which is based on a par value of $0.0001 per S-share. It shows they have a lot of authorized stock that isn't currently in play. Then there is the additional paid-in capital, listed at $194,399. This is the money investors have paid for shares above their par value, and here is a big one, their accumulated loss. As of the 30th of September 2025, it stands at a negative $125,890. This shows the company has lost more money than it has made since its inception. For context, this accumulated loss is larger than their total assets. This brings their total stockholders' equity to $71,509, which is the same as their total assets. This makes sense as equity is assets minus liabilities, and their liabilities are basically zero here. Moving on to the statements of operations. This tells us about their performance over a period. For the 9 months ended the 30th of September 2025, Vanjia reported zero revenue. Absolutely nothing. However, they did have general and administrative expenses totaling $6,100 for the 9 months. This results in a net loss of $6,100 for the 9 months ending the 30th of September 2025. Now, contrast this with the same period in 2024. For the 9 months ended the 30th of September 2024, they reported revenue of $50,000. And surprisingly, after some general and administrative expenses, they showed a profit from operation of $30,036, leading to a net profit of $30,036 for that period. That is a huge swing from a profit to a loss in just 1 year, with revenue disappearing. For the 9 months ending the 30th of September 2025, their net loss per share was $0. This is because they divided their small net loss by the 30 million shares outstanding. Similarly, in 2024, with a profit, the net loss per share was also reported as $0. The statement of changes in equity gives us a year. Over year, look at how their equity has evolved. We see the balance on the 31st of December 2023, with total stockholders' equity at $833,553. This included a substantial accumulated loss back then too. By the 30th of September 2024, after that profitable period, their total stockholders' equity actually increased to $863,590. Then from the 31st of December 2024 to the 30th of September 2025, the opposite happened. The equity dropped from $77,609 down to $71,509. This matches the net loss reported for the 9-month period. So, by the 30th of September 2025, their total stockholders' equity is $71,509. It is a significant decrease from the previous year's equity, mainly driven by the disappearance of revenue and a shift to a net loss. Now let's look at the statement of cash flows, how money actually moved in and out of the company. For the 9 months ended the 30th of September 2025, their net profit loss was a negative $6,100. After some adjustments, their net cash used in operating activities was a negative $1,380. This means they spent a bit more cash on operations than they generated directly from their core business, which is pretty much non-existent in this period. Compare that to the 9 months ended the 30th of September 2024. Their net profit T-loss was a positive $30,036, and remarkably, their net cash used in operating activities was a positive $49,022. That is a lot of cash generated from operations, which aligns with their reported profit for that period. Their cash position started at $72,889 at the beginning of 2025 and ended at $71,509. A slight decrease, but not drastic given their minimal operations. Let's quickly glance at the notes to these financial statements. Under nature of operations, Vanjia Corporation, formerly Vantone Realty Corporation, was incorporated in 2011. Their original business plan was to build affordable homes, and later they added enrolling students for real estate licensing courses. But here is the kicker for 2025, they are actively seeking to expand into a whole slew of high-tech fields like AI, data storage, robotics, blockchain, energy, genetic science, and the franchised hotel industry. That is a pretty ambitious pivot from building homes. In the income taxes note, they mentioned that as of the 30th of September 2024, they had an accumulated deficit of $75,810. They also state future tax benefits from losses haven't been recognized because their realization isn't likely, so they've recorded a full valuation allowance. This means they don't expect to use those past losses to offset future taxes. Their line of credit is interesting. They have a $5 million line of credit available from an officer and shareholder at 0% interest, due on demand, as of the 30th of September 2025 and the 31st of December 2024. They had nothing drawn on this line of credit. So, while the facility is huge, it is not being used. Under significant events, they discuss the impact of COVID-19, noting it hasn't significantly affected the fair values of their financial assets or liabilities as of the reporting date. Now, let's look at the management's discussion section. This is where the company explains its own performance and outlook. Their plan of operations for the next 12 months is to proceed with implementing their business plan. This includes legal and accounting expenses, website design, surveyor's fees, architect drawings, project consultants, marketing, and working capital. For surveyor's fees related to land subdivision, they estimate $4,500. Architect drawings are estimated to cost between $5,000 to $7,500 per year. Project consultants for quality control of construction are estimated to cost between $6,300 to $12,600 annually. In terms of liquidity, they state on the 30th of September 2025, their current assets were $71,509 and total liabilities were effectively zero, resulting in working capital of $125,890. This seems a bit contradictory to the balance sheet showing total assets of $71,509. Remember, working capital is current assets minus current liabilities. If current liabilities are zero, then working capital should equal current assets. So there appears to be a discrepancy in how they're presenting that number. They expect to raise more capital through various means, including the $5 million line of credit from their officer and director, which they believe will be sufficient for the next 12 months. They explain that from the 31st of December 2024 to the 30th of September 2025, they hired attorneys and auditors and prepared a business plan. Their accumulated net loss during this period was $125,890, which aligns with the balance sheet. The company states they have no material off balance sheet arrangements. As a smaller reporting company, they aren't required to provide detailed market risk disclosures. Their management, including the principal executive and financial officers, has concluded that their disclosure controls and procedures are effective. Under other information, they state there are no material legal proceedings, no unregistered sales of equity securities during the quarter, no defaults upon senior securities, and mine safety disclosures are not applicable. They list several exhibits including certifications from their officers and financial data files in XBRL format, which is standard for SEC filings. And finally, the signatures Tian Suhua, the Chief Executive Officer, and Tian Jia, the Chief Financial Officer, have signed off on the report dated the 12th of November 2025. So, what's the story here? Vanjia Corporation presents a company in a state of flux. They have a history in real estate and education, but their stated focus for the future is a massive leap into cutting-edge technology sectors. The financials for the most recent period show virtually no revenue and a net loss, a stark contrast to the previous year where they showed revenue and a profit. Their balance sheet is surprisingly small, especially when you consider the enormous number of authorized shares. The available $5 million line of credit at 0% interest is a significant resource, but its lack of use is either a sign of prudent management or a lack of immediate need for funds, which seems at odds with their reported losses and ambitious expansion plans. The discrepancy in the working capital calculation is a small red flag that might indicate a minor oversight or perhaps just a wording issue. But it's worth noting ultimately Vanjia seems to be in a transition phase, with their reported numbers showing them currently struggling operationally, while their management is planning a dramatic pivot into high-growth tech areas. The key question will be whether they can execute this pivot successfully and leverage their available credit line to fund it, given their current lack of revenue. Alright, that is our breakdown of Vanjia Corporation's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.